The week kicked off with news of JP Morgan taking over First Republic, not really received well across the bond market and kind of pushed mortgage rates up through Monday. Then Tuesday through Thursday, we saw a complete reversal, complete rebound across mortgage-backed securities. Really kicked off Tuesday morning with JOLTS. It's a job opening and labor turnover survey, which showed that job openings was much lower than they had expected. This ran us into Wednesday, where we had the first of the two major economic events this week, and that would be the end of the Fed's two-day meeting, where they announced another 25 basis point increase to the federal funds rate. Remember, this is not mortgage rates. But the big thing was the 2:30 press conference with Jerome Powell. He basically indicated that this was going to be the last meeting with for a hike. They wanted to seek a pause, kind of look at some incoming economic data to determine if it was going to be appropriate to have any additional hikes. This is exactly what the markets have been banking on. They've been predicting for a while this is going to be the last meeting with a hike, have a pause for a bit, and maybe even a couple of rate cuts by the end of the year. But I'm not big on that, but we'll have to wait and see what happens. But into Thursday, we had some additional banking drama. PacWest Bank and Western Alliance were both rumored to be up for sale. They've had some major losses across their shares, so there was some additional banking sector uncertainty that fueled rally through Thursday. Led us into Friday's employment situation report. This is the big ticket item. This is the largest labor market data each month, and it was a huge miss. Payroll growth was higher, wage growth was higher, unemployment was lower than expected. Could have been a huge spike across mortgage rates. There was revisions to the two previous months, and when those numbers were taken into consideration, if you look over the 3-month average, it was the lowest payroll growth over the last 3 months going back to early 2020. So I'm sure it definitely helped kind of suppress some of the potential reaction across bonds and mortgage rates. Now, rates did close out the week better than we started, so we'll definitely take that. Even if questions about these headlines or about these rate trends, or if you're ready to discuss your pre-approval options, definitely give me a call. Enjoy the rest of your weekend.